Check, please.
Welcome back to Everything Money. In this video, we will talk about 3 stocks that are at their 52-week low. A very highly popular video series, Paul, we've been doing. This is FedEx, GE, and Netflix. Now, if you're an Everything Money follower, we can hardly mention FedEx around Mo.
Oh, God.
Because he gets violently triggered and angered. So we've asked him to step out of the room. No, I'm serious. But why do you hate FedEx and all
He hates
delivery
all
services?
shipping companies.
I like UPS. I like UPS, and that's it. They all suck. They're all terrible.
I think FedEx is better than UPS.
Well, you're wrong.
Deep down, I love my FedEx driver. But we're going to go over the financials of these companies because guess what, folks? If you've watched any of the show, we're value investors. We like to find great companies, and when there's a disconnect in the price, like maybe right now, they might be in our sweet spot to buy.
8 pillars. We're going to 8 pillars, and we're going to pick up FedEx. Guys, so FedEx has been hurt a lot lately. So look at this chart. This is a 5-year chart on FedEx. Previous 52-week high was 320. 52-week low was basically 200. It's at 213 right now. Go to the 8 pillars real quick. All right, so it's selling for reasonable PE, but look at this, guys. The PE is 18.5. The price of free cash flow is 83.
Now, I have not seen a disconnect like that.
I usually prefer it the other way around. So first things first, guys, as part of your research, why is there a disconnect here? Why is free cash flow so low compared to earnings? Probably a lot of capital expenditures one year. Let's go to the free cash flow statement and find out. Where was the big drop in free cash flow? Ooh-wee! The first 3 years of this 5-year period. Negative. Oh, my lordy. They had the same, so it was something having to do in the fundamentals of the business because the capital expenditures are about the same. So that's automatically a red flag for me. Now, this could be an anomaly. This is the last 10 years, only 3 of them. Let's look at the previous 10 years. They had all positive free cash flow, but it's all over the board, guys. So especially in a company like this, you want to focus on the long term. You want to look at the long-term averages. Don't just buy the 1 year off album. Like, oh, we had great free cash flow. You're great. I'm going to buy them. No. Look at long-term. You look at their history. You look at our software and go to their past history. It shows inconsistency in free cash flow. All right. So back to the 8 pillars. They bought back a few shares. They have cash flow growth. Okay. All right. So I'm not in love. I'm not upset. Look at this return on invested capital. This is also, our return on invested capital is driven by 5-year free cash flow. So it's been so bad. That's why low return on invested capital. The 1-year return on invested capital is 4%. It's not even that great. So guys, you really have to get a discount on this thing. When they're reinvested, when their ROIC, their return on invested capital is very low, you need to pay a lower price to the company because you have to be able to sit there and be okay with them not doing a good job making money off their capital. And that's fine. Just keep that in mind. If it was a high return on invested capital, you'd be willing to pay a premium because they can go reinvest their money and keep getting more and more profit along the way, more and more cash flow. Does that make sense?
Yeah.
Great. Let's go to GE. Now, GE, guys, this is a doozy of a company. I mean, look at the stock price. First off, they reverse split a while ago. Back in 2001, hit their heyday. And if I told you in 2001, after this chart, that the stock was going to be 75%, 80% lower, what would you have said to me? GE, 80% lower? This is the company. That's what happens.
Mm-hmm.
It's a very complicated business. They got a lot of financing involved. I would just be my personal opinion on GE is, look at these 8 pillars. Good lordy. Look at their income statement. I mean, look at the revenue. It's half in the last 10 years. They've sold off divisions like crazy. They're selling off their assets like they're Michael Jackson. That was stolen from, I usually give the challenge to do it, but then people can Google this one. This is that's from Entourage. When Ari Gold starts his own agency and he's losing money like crazy, he goes, I'm selling off assets like a Michael Jackson. So net income, guys, I'm just going to avoid on GE because I don't understand the business. I don't understand how this could happen.
Free cash flow is all over the map, too.
Is it?
Yeah.
Look at the balance sheet. Their balance sheet's insane.
Everything's all over the map.
I just don't get the balance sheet. I don't understand anything here, so therefore I avoid it completely. We have 6,000 people in our Everything Money community chat. Somebody there will understand it. People there will understand it. I just don't understand it and choose not to understand it. That's just it. I'm just like, I don't want to go stealth through the 10K on this one. I'm too lazy.
This has been especially liberating for a normal person like myself because I hear people say things like, you should really research this, or you guys should have.
Well, you should if you're interested in it, and if it makes sense to you.
But I don't want to force the issue.
Exactly. Go pick something that makes sense to you.
Make myself interested in something.
I got a comment once before from somebody saying, I just don't get Mo's day trading. Great, then don't do it. And they even said, it's like, I'm sorry if I sound stupid and ignorant. I'm like, no, it sounds brilliant. You don't get it? Then don't do it. He was like, oh, I felt bad saying that. I'm like, no, if it doesn't speak to you, avoid it. GE doesn't speak to me. GE doesn't speak to me. You know what does speak to me?
Netflix.
Because
you sit in that master bed of yours with the dog.
I don't have a TV in my bedroom.
Oh, you got rid of it?
It wasn't in the budget.
Okay. Sorry about that.
Netflix. Look at this stock price. A high of 700 in the last year, guys. Good and a low of 334. For those of you who can't do the math, that's a 50% drop. A high of when Mo told me recently that Netflix at $700, I'm like, what? Mm-hmm. He goes, yeah. I'm like, he goes, yeah. I was like, I had no clue.
$335.
Yeah. So let's go to the 8 pillars tab. Oh boy, a lot of X's here.
So a normal viewer might ask themselves, well, what changed? Did Netflix all of a sudden put out a bunch of crappy content?
Perception.
Did they raise prices?
I think they were growing at a slower pace.
Competition, I think.
Oh, by the way, there's a ton of competition. But how many streaming services do you have, Mo?
I run a streaming service, actually.
I was going to say,
everybody has
everything
one, right?
Streaming service.
On my phone, these are the ones I pay for. Hulu, Netflix, YouTube, HBO Max, Disney Plus, Peacock, Showtime, Amazon Prime. Guess what? Still cheaper than cable.
Yeah.
I mean, it's not really.
I have all of those too, plus Apple TV.
Yeah, I have Apple. I don't think I have Apple. Do I have Apple TV? Yeah, is that part of that Apple One package? Yeah. So I have Apple TV too.
It's incredible.
But I look at it going, I have content for everything I want in the world, and it costs me a total of, how much does that cost me a month? Yeah, probably less than cable.
Yeah.
Netflix is the most expensive. Second most expensive is probably what?
You have YouTube
Peacock? TV? Oh yeah, YouTube. I don't have YouTube TV. I have YouTube Premium.
Okay.
So I don't include that because that's just for no ads.
Yeah,
why do I have YouTube Premium? Oh yeah, because you guys bullied me into it.
Yes.
You idiots.
Remember we used to pull up YouTube shows on this show and we'd have to go through commercials with this account.
It was the worst.
It's like the Stone Ages.
It's Stone Ages. It's like, what is it, like $10 a month?
So let's go over the 8 pillars for Netflix, Paul.
So Netflix, guys, they have negative free cash for the last 5 years, negative 1.23. They're investing a lot back in the business. They're still probably, I mean, look at this price to sales ratio 5. That might be something to look at. The problem with Netflix is the numbers probably won't make much sense. This is where we're going to use a stock analyzer tool. This stock analyzer tool has been so beneficial for companies like this that are starting to generate profit, but you can also increase their profit along the way as their revenue goes up. Okay? All of these tools that we have on the software, everything here is going to be useful in some facet to help you analyze businesses. The 8 pillars, the retirement calculator has been so effective for people to realize that they're either undersaving or oversaving for retirement. Stock analyzer tool, which I'm going to go through in 2 seconds, 8 pillar portfolio, exclusive video content every single day in the mobile app for the software and in our chat. We release videos from Seth, Mo, and I that are individual videos just geared towards our users of our software. Watch list. You'll see it after the Netflix. You can put stocks in your watch list with price targets. It'll notify you when the stocks hit those price targets so you can go in there and buy or do your research, do whatever. This plus all of this is available with EM Community Chat. 6,000 people in this chat, guys. You can literally go in there, search for Netflix, find out what people are saying. Don't do all the research yourself. Use the community aspect to do the research together to get an idea from like-minded people what you should be paying for Netflix. Guys, everything I just said here, imagine a price, $1 per day, less than a cup of coffee to get all of this. Change your financial future. 1 or 2% gains or decreasing your losses by 1 or 2% a year, avoiding the Pelotons and the Palantirs will get you all of this for $1 per day. No brainer, leads to hundreds of thousands, if not millions in retirement. 2 ways to sign up, everythingmoney.com or Patreon for our international users. Sign up. We're adding exchanges every day. We're going to add more content. This thing will be so different 5 years from now. I can't even believe it. Lock it in because whatever price you pay today, you're locked in at that level forever. As we increase the price, you only go up for small changes here and there. Revenue growth numbers. Uncle Mo, give me some numbers.
Oh boy. 12, 15, 18.
I think that's too high. That's my opinion.
All right.
So to me, I look at it going,
I think 12 is good.
You?
I mean,
Guys, my goal is to be conservative. And I tend to be more conservative than most, but to me, there are 10,000 stocks out there. Let's be conservative, but we'll still do 12, 15, 18. What about profit margin? 84%, Mo?
90, 91.
Now here, I'm ignoring these last years. I'm ignoring these and focusing more on these future numbers.
So what if I said 7, 9, and 11
For profit margin?
Because I mean it's
For profit
still
margin.
software.
Software is high profit margin.
Well,
And-
their 10 years is 9.3.
Yeah, because they were losing money along the way while they were trying to grow.
What did you put their profit margin at?
I was going to put 15, 20, and 25.
Well, don't forget to factor in that they have their own studios too. We need to factor that in.
Let's go this. Let's do
A lot of
12.
CapEx.
Let's do 12, 15, and 18. How about that?
Okay.
Free cash flow. You going to put negative ones in there?
Sure. Oh God, I don't even know what their free cash flow is going to be. You pick that one.
I'm still going to go 12, 15, and 18. I'll show you my caveats in the future.
All right.
All right. PE and price of free cash flow.
14, 16, and 18, I guess.
Guys, now this is a hard one.
To me, when I look at a company like this, I would look at this thing and I would just be like, I'm not doing this.
So I wouldn't. I would still look at it, but what I'm going to do is I'm going to put my desired annual return. I usually put it 12.5%. I'm going to go 15%. The reason
the
being,
risk
the
is there.
higher the annual return, the more margin of safety there is.
Yeah.
What'd you say, Mo?
Because there's more of a risk.
There's more of a risk, and we don't know what these numbers really going to end up being. So I want more squeeze or more juice for the squeeze. Oh wow, look at this. It's getting close, Mo.
Yeah.
A low of 150, a high of 408, which is in the sweet spot already, and a middle price of 250. So, me personally, I'm adding 250 to my watch list.
Now,
Boom.
wait a second.
Add it to the watch list.
Go back and put in your revenue numbers.
Notify me. Okay, got it. Now my revenue numbers,
Yeah.
you're gonna crap. 8, 11, and 14.
Okay.
Analyze.
What do you got?
I got 115, 190, and 305.
Okay.
So I look at this saying, guys, Netflix is now starting to get in the area. And guess what? When Netflix was $200, whatever long ago, I said it was overpriced. But companies' fundamentals will get better. The price will come down. And at that point, when price goes below what I perceive the value to be, I'm buying.
Mm-hmm.
So I'm looking at going, yeah, sub 250. Let's start looking at this company. Because when it gets to 250, maybe it takes a year or two. The fundamentals may have gotten better. Great.
Another question. This company's been around for a long time, and they still are in this shape. At some point, maybe they're not going to have the greatest financials in the world, and that's just how it's going to be.
Maybe.
I mean, this has been going on for a very long time. They were on the cutting edge of the streaming world, and they're still in not the best financial situation. I look at that saying, that's why I would look at this and say, okay, they've been doing this for a long time. I'm moving on.
But you might be right. I think there's going to be consolidation of streaming services at some point because everybody has a streaming service now. And I think Netflix is a leader in streaming.
They are the leader. Yeah.
Whenever I want to go just watch something random, I don't go to Hulu. I go to Netflix. What do you guys do?
Same.
I go directly to Netflix. So I do think they're the leader, but they've also been the leader for a decade.
Yeah, I actually am. I know people are going to be laughing like this is like, I look at it going, I think I can find value in this company at a certain price. And I think that price is much lower than today, but I think it's there because I look at it going, yes, they will be profitable at some point. It's like the Amazon of shipping. You know what I mean? At some point they'll be profitable. Granted, Amazon didn't make it from shipping. They made it from
AWS.
For AWS. But either way, but look, guys, this is the point. Mo's a value investor, I'm a value investor, and we just agree on Netflix.
Yeah.
Great. And I guarantee I'll find 100 value investors, and some of them will agree with me, and some of them will agree with Mo, and some of them will just say, I don't give an F. That's value investing. That's investing in general.
And also notice that we all said that we still love and use Netflix. So it has nothing to do with like or dislike, just like when we start going and talking about these other companies like Tesla.
Absolutely.
Yep.
It's amazing the negativity we sometimes get when in reality we're just kind of three guys in a value investing world where we just want to find things a little cheaper than what they're asking for. It's like you're going to a garage sale and we just want something a little cheaper. It's not the worst. Everyone kind of wants this deep down.
Well, everybody says they want cheaper. Everybody says they want to buy things at a discount. Whenever I ask a room, like, hey, what's your favorite thing to buy? And they say, no, widgets. Great. If widgets were half off, would you buy more of them? Absolutely. Okay, well, stocks are half off. Would you buy more of them? Sure, of course I would. And then when it actually happens, they start crying and screaming. And guys, that's the emotion part of it. I get upset too. And I just have to go back and say, Paul, what's the reality? Will this company be around in 10 years? If it is going to be around in 10 years, will the revenue be higher or lower? Will the profit be higher or lower? Can I pay a reasonable price today for that potential? Great, I'm a buyer. That's it. The emotional part's the hard part. The numbers part's the easier part. So join our community, learn all that stuff. And the emotional part's also discussed incessantly in this community. I'll see people all the time like, remember what Paul's teaching us. Remove the emotion from the numbers. Remove the emotion from the numbers. And guess what? I love reading those because I need the reassurance at times too.
Yeah. Stick with our channel. I'm assuming prices will continue to go down as a lot of bad things are continuing to happen. So we will keep you updated on our thoughts when some of these companies enter our value investing sweet spot. Subscribe, hit the thumbs up. We'll see you next video.